Hey everybody, what's up? It's Booksy. I'm just going to do a quick video talking about the AMC chart and all that stuff. I'm not going to really address the drama with TradingView. I don't really care about that. I just want to talk about the what I think is the most important part of the shift with the AMC chart this week and why the lack of proportionality matters in the chart, and what I think a lot of people are misunderstanding when I say that I'm charting both AMC and AMC plus APE. Why that's really important to me, and just explain a little bit of the math behind it. So first of all, why is this even a concern for me? Well, 100% of technical analysis is based on mathematical proportion, period. 100%. Technical analysis does not exist without mathematical proportion. When you're using a fib, when you're using a Gann chart, when you're doing trading patterns, all of that stuff is based on proportion. If you don't know what proportion is how parts of something relate to other parts of something. Usually it's like a person, like how big is a person compared to a car. That's the proportion. But you can use the proportion within, right, just the person. You can say, well, how big is the person according to how tall their head is? You know, the average person is 6.5 heads tall. So you can take their head and proportionally they're about 6 heads tall. Okay? That is the basis for everything we do. When you look at the relationship between one place to another in a chart, you're talking about proportion. You're talking about how things line up. When you're looking at Fibonacci retracement levels here, you're looking at proportion. So it's very, very important, right? Because you're saying it's going up this amount and it's coming back, what, 0.618. What is that? That's percentage. That's a proportion. 61.8% of a total. That's a proportional amount. So it's really important that things remain proportional for AMC, and they did not this week. And they did and they did not. It's kind of confusing, right? So on the one hand, we didn't have access to this chart, most of us, until today or even yesterday, meaning that you essentially were flying blind this entire week, which should in and of itself be illegal. There should be no reason that a chart should not update immediately in a stock. And the only reason I can find is that basically they didn't know, or they were not given information about how to adjust the chart appropriately. And I still don't, I just don't think it's right. I think it's wrong, because essentially you had to do your own mapping of AMC. So what most of us did before TWE came out with his thing this week was they did an AMC plus 8 chart like this. And this gave you a combined value chart of AMC plus APE, right? So here's AMC for this week. All right, yeah, sorry, messed that up. This is AMC for this week right here, right? And then this is APE. You can see it right. It starts right on this double flush where you have the S curve. Okay. Notice how these charts look completely different in terms of proportion. Where did the S-curve go in this particular case? Right? Where did the stock in general go? Mostly down, right? It looks like it's just kind of sliding down. Where did APE go? Mostly sideways. It basically just whipsawed and then started gently going down on a whipping motion. Where did the combined chart go? It kind of bottomed. It looks more like a normal AMC bottom. When I did the, and why is that, right? So when I did the combined chart before yesterday, all right, I did the combined chart and I mapped it to the original chart. Now you can't see it anymore, but it used to be right here. Like it used to tie in very perfectly, and now it's all gone, okay? And I might have to bring up some simple examples of this, but basically these were my trend lines, okay, these pink guys, and these were the two fib levels. This was the right here, this was the 854 fib, and this was the 786 fib. I think you're already hopefully seeing where I'm going with this. Essentially, by doing a massive chart shift, normally what you would expect is that there would be a set percentage, right? There'd be some set percentage so that you know that the chart's gonna shift down like 50%. If the chart shifted down 50%, evenly, then every value is converted 50%. You're not losing or changing one value. One value doesn't get 50%, the next value you get 58%, or 58%, the next value you get 40 something percent. No, like every value is shifted the same percent. Well, that did happen when they shifted the chart. They shifted everything exactly X percent. That's why the chart looks the same. Now, I haven't done the percentages, but you can look really closely and you can just see that, okay, well, we know this was a 34.31 right here. Yeah, so the high here is 21.08. And you can figure it out pretty quickly. I haven't even done them, but I know that because I just got it shifted today, and I didn't even really care that much, but I was looking mostly at this week, the relationship between AMC and Ape, and the fluctuations were all over the place, right? They were not consistent at all. So in this case, sure, like we could find out, what this percentage difference is. So we've got, let's see here, 2108, right? And that used to be what? 34.31. And so it's coming out to a 61 point blah, 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 blah. This is crazy. 61, it's basically a 614. I mean, I don't even know what to say. It's like 61.439, so 0.44. So 61.44% chart shift, okay? 61.44% shift. Now, all of that happened equally everywhere on this chart except for where? Here. And I know this for a fact because, so everything all up until this point in time in the history of AMC stock, right, is still proportional. 100% proportional, meaning it matches this 61.44% shift evenly. But from here on, it does not. And I know this for a fact because all week we were doing the ratio values and they were not consistent between Ape and AMC. They remained inconsistent at times, and I don't think they ever came into a lockstep of consistency. Therefore, the AMC chart slid much farther than the AMC plus Ape chart. And this kind of proves the point right here. Because in the original chart, again, I said this was the 786, and this was the 786 right here, and this was the 854. If you want to sort of get a proof of concept of that, I would have to kind of go back here, and basically what I would have to do is, I think it was like from here to here. It was pretty close, right? It was something like that. I can't even find it anymore. It would have been this. Yeah, right there. Something like that. Okay? Something like that. I don't have them on my charts anymore, so I can't show you perfectly. But I know that 1528 was the 854 before the chart shifted. Okay? Now look what happened after the chart shifted. Go back and do the same measurement, and you'll find that it is not the same. Not surprisingly, because the chart was inconsistently shifting around. So in this case, it looks like we were rejected by the 854. You see how clean this was? Look at how clean it is over here. Look at these touch points on going up here. Right? And then look at this coming down through here. I made an analogy. I said it looks like a sandwich melting on a windshield. It's like the parts are all there, but it's just oozing down sideways. And why is that? Because they're not giving it an equal percentage of attention. They're not giving it an equal percentage of basically volume control in their algorithm. They're bouncing back and forth. They were actually doing things where they were running them in opposite moments at different times. And it might be in some ways a reactive thing where they're trying to react to volume. It could also be that they're going to play these two stocks very differently, and they may even play them off each other at times. And I'm not sure what to think about that just yet. All I know is that this is definitely not the same as it was before. And if you looked at this chart today, it just looks like a hot mess. It doesn't look like it respected the 854. It looks like it's ready to go down and drop to possibly a double bottom. But if you look at the AMC plus APE chart, it respected and bounced off the 854, and all it would need to do is recapture the 786 and keep going. But we're like way far away from that now, proportionally, because there is no consistency. All right? This is a very, very big deal. Essentially, and let me go through my notes here. Yeah, AMC had a portion of its value moved. So if you had a pie, right, and you wanted to remove a portion of it, you could cut out a piece. That's a super simple analogy. You can cut out a piece of that pie. You could take out like 25%, 50%, whatever, right, and move it over. However, this is not what happened with AMC. There was that one and done in the very beginning, right? But it has not remained fixed. It's like somebody keeps taking the pie on and off your plate and then putting it back onto your plate. It's like somebody gives you 50% and then they cut away a little bit and take it back to the other pie, and then they add another 3% and then they take away another 2% and then they add 15% and then they take away 10%. I mean, like, that's the way it was going all week this week. So it created an inconsistency in the AMC chart. Now they're just not respecting the trend lines. Now I went back and I redrew these trend lines and I was like, well, thankfully, even though it didn't respect this upper one, this is the one that I was looking at predominantly, this guy right here. And it looks like it rejected off of it now on our AMC chart. On the AMC plus APE chart, this is the same exact level. And it looks like it kind of whipped around it and then came back down beneath, again, mostly respecting those fib levels, which would have made sense. So it's very strange. I think that this may or may not be an issue, all right? But we're going to have to take it in stride because it's very important. Some people have asked, hey, are these are not their own, these are their own tickers, so shouldn't they be traded independently? Why would you look at both together? Well, yes, but again, this is a 100% of the volume, 100% of the algorithms, of the composite nature of the algorithm is all here. This is not. This is apparently, supposedly, lacking some 38 point whatever percent of the total attention. But it's varying, and it keeps varying as it goes. It's not consistent. So all the established trends and the fibs that we have were based on this all being proportional. But this is out of proportion. Very simple. Is this going to be a problem down the road? Well, probably not in some ways, but if they decide to respect the charts independently, I don't think it's necessarily going to be a problem. And what I mean by that is this right here might have been a touch. This might have been a touch point on this trend. It could have been. They might use it as such. And if so, then great. We can confirm that is indeed a trend line. In addition, it had its own trend lines. It's not like it was like not, it wasn't not chartable. It was still chartable, right? I mean, there was still a downtrend here that you could chart. There were trend lines that were respected. It's not like in and of itself it was unchartable. It was chartable, and so was APE to a degree, though APE looks very weird and boring. However, neither of those charts looks like in proportion looks like what the setup looks like on the AMC. This setup still looks bullish because it had a successful bounce off the 854 for now. Now it rejected on the 786 at close, but it also rejected on another downtrend, so it may need to break out there. This is still very bullish. This combination chart is still respecting the guidelines that were set up from the trajectories. And that's pretty impressive. And the fibs. So whatever they're doing is still respecting the combination chart, which is kind of mind-boggling. But unless they bring it into proportion, then there's no reason to think that any of these lines should be respected. Now, will they be respected? That's a different question. And I think the answer is they probably will be, right? They probably will be, because in order to create effective traps for retail, in order to create effective opportunities to trade a stock, it has to make sense, right? And a stock that is trading with like no liquidity, like a penny stock, doesn't make sense. So therefore, it's almost unchartable. You can't really chart it. But something like this that's on some structure should make sense. So it could be that over time, as this goes, it starts to re-respect these different lines, and you start seeing that, yeah, there's plenty enough volume here and on APE separately, independently, that they do respect these existing trends. But what I'm saying is that this week, they definitely did not, in my opinion, because of the inconsistency in proportion. And that's my big question here and my biggest concern. If they can run these things opposite of each other, and that there's basically this invisible APE plus AMC ETF going on, and that's really the bottom line for them, is what's going on between the two. If an institution has a stake in both, and they seem to be in both, I'm not suggesting they're not, because you can tell, again, that they're still respecting things that don't even exist anymore. If that's how they treat it, then, and they don't even have to look at this. It's just numbers running a bunch of formulas, you know. They could basically be trading 3 stocks at the same time, in a manner of speaking, and create, 2 stocks at the same time, in a manner of speaking, create this kind of ETF for themselves. And that's bad for retail, because unless retail is charting the same thing, right, and I think we should, we're going to be at a bit of a disadvantage, because you're going to essentially, I don't know how to put this in a better way, but you're not going to get the whole pie at any point. You could always be getting like a varying percentage. And I think in the end, all this really means is it could create some opportunities to really mess with retail. And you could see stuff like false breakouts more often, things like that. Not because they're just being relaxed about it, but because it's really going to be even harder to know like what to trust. You might see a false breakout and then go to the AMC Plus APE chart and realize that's not a false breakout, you know. And before, like, we would see those things and it was pretty easy to tell, because you're like, oh, it's distribution or it's accumulation or whatever, and you could kind of tell like, oh, that's something, you know, look out for. We had these patterns. This has given them like a whole nother arsenal in my mind, because in my mind I'm like, oh, well, if they're not going to keep them in lockstep, then they can really play with the charts. And it's like it opens up a sandbox of opportunity for them. Now, I'm not saying this to create fear or something or panic. I'm just saying that I think it's really important that people recognize this right out the gate, and they recognize that in order to trade this effectively, you're going to have to use the combination chart at different times to check and see what's going on. And it's impossible that they're not separate, because they both represent the same company, and they represent a portion of the same company. It doesn't matter if APE goes down to $1 or if APE goes to $100. You know, it doesn't matter the relationship between each other. They're both pieces of a pie. And so the composite, the ETF of the both of them, right, the grouping of both of them is the ultimate, like, the representation of what we think the valuation of the AMC company is, right? And therefore, if that's the way it's being treated, and it seems that way right now after week 1, then it's really critical to pay attention to. All right. Now, that doesn't mean that you can't just trade AMC or you can't just trade APE. Again, I think they'll do some things and make an effort to keep these things consistent as this starts trading further. I'm just saying that there may be some significant differences in the expectations. There might be significant differences if, for instance, like, let's say we had that $30 price target. You can't just take 61% of that and expect that to be exactly what it is. It may end up being only 50% or 58%. And on smaller numbers, that doesn't matter that much. But on bigger numbers, like, those differences can be a lot, you know. So as this thing progresses, who knows? Like, if it's not fixed, those fluctuations could be very significant. And to me, that's kind of spooky, right? And hopefully the charts work themselves out. But for now, just be careful and pay attention. In my opinion, I think everyone should be paying attention to all of them, all three of them still. And I don't think it's as simple as they're separate. They're not, right? You can take a square, and if you take a square and you do it proportionally, it's still a square, and it maintains, whatever. But you can take that same square and adjust it not out of proportion and have the same volume, and it looks very, very, very different, right, with the same volume. And if you don't scale something, with the same volume, you could get wildly different results. So we're on a whole new, this is a whole new level right now of uncertainty. Again, my hope is that it doesn't happen that way, that it's pretty consistent, but I need to put this out there. So thank you all for listening. Hope you have a good weekend. We'll talk to you later.